Good morning. Market Day Report is on the air. We're preparing to trade what could be a good day of trade. Of course, it depends on whether you're wanting the market to go up or down, and hopefully it goes the direction you want it to. Now, one thing we do know, the PPI numbers out today from the Bureau of Labor Statistics, and they're showing no changes for wholesale prices. So does that mean that the tariffs are not really impacting the economy like some analysts thought? Well, we'll talk more about that throughout the morning. Right now, let's jump into the corn market. Overnight trade action. Positive again. How about 2 straight days of higher trade? Now, I'm talking about daytime trade, not the overnight session, but 2 days that we've settled higher in the corn market. September back well above $4 now, and look at the December with a pretty big rally there at $4.24 3/4. Beans are higher, 10.11 in the November, which is new crop, up 9 3/4. Soy meal is higher across the board. Soy oil is higher across the board. We were mixed in wheat yesterday, and Chicago remaining lower after that close lower yesterday. And in the overnight session, hard red turning it lower after settling higher. Finally, cotton market in overnight action down 15 at 68.44. Brian Hoops, President, Midwest Market Solutions. Brian, I'm just going to go out on a limb here and say you may start with soybeans and something called a flash sale. Am I right?
Let's talk about that, Tony. Yeah, another sale this morning, 120,000 beans to an unknown destination. That was the first one this week. So positive that we saw a little bit of export business. I don't think it's real surprising that with corn and soybean prices testing these levels, soybeans below the $10 mark in a couple contracts earlier this week, corn below $4, that we're going to see a little bit better demand improvement. In fact, we've seen some active fund short covering, about 16,000 contracts Monday, another 15,000 bought on Tuesday. And today we're working on our third consecutive higher day for the corn market. So I don't know that there's a start of a real strong uptrending market. Usually that's not the case in July. Usually you see short covering rallies like this get sold pretty heavy. Maybe we're going to go target those gaps that we left after the 4th of July weekend. That would certainly be common sense, I think, for us market to try and rally, go fill those gaps and turn back lower, especially if the weather remains good. So it's not really a fundamental story from weather turning adverse or anything like that. It's more of some short covering technicals giving us a little bit of a bounce here in a very oversold market.
Hey, Brian, I want to quickly bring in soybeans again, lower 3 consecutive sessions. The meal has been lower 3 straight sessions, but the oil higher for 4 straight sessions, and we get an OPA crush number. Is there potential for beans to rally just being pulled by soy oil?
It's probably going to have to be pushed higher by soybean oil if it's going to rally here at this point in time, just from the standpoint that we're into almost to the end of July here now as far as forecasts go, and they look very beneficial. A lot of warm temperatures, a lot of moisture, especially that eastern corn belt next week, getting some much needed rains. The NOPA crush numbers that you talked about, that pushed meal to contract lows yesterday, weighing on the soybeans, but it also showed soybean oil stocks for the month of June, the lowest in 21 years. So our numbers are very tight as far as those oil stocks. That market looks to be one that could continue to push higher. In fact, that's really the only grain market that's in an uptrend right now. It continues to work its way higher and will pull soybeans along with it.
Yeah, and only one other row crop moving in higher territory this week. It's been the cotton market, 2 straight sessions higher. We'll take a break, come back, talk livestock. Market Day Report continues in a moment. We do have cash cattle already developing this week, 238 in the north, dressed at 380. Asking prices are higher. Let's bring back in Brian Hoops with Midwest Market Solutions. Brian, what are you watching here in the cattle market?
Well, we did have a decent rally yesterday, and it was on the strength of the higher cutout values that came out midday and the close again on Tuesday afternoon. Those higher cutout values are going to be supportive for the cash trade this week, especially if we can see follow through cash trade or higher cutouts today again. If we're stronger again today, those feedlots I think will be really digging in their heels. They're asking for higher money. The numbers that you mentioned early week cash trade, just kind of a handful of trade, just kind of some starter trade. But the sale barn in Yankton yesterday, very strong and just remains red hot.
Okay, and then again, that feeder market has been on fire here as of late, but then hogs have been down for 4 straight sessions. Is it time to be concerned?
Well, I think the trend has broken in those hogs. We did get a little bit of a bounce yesterday, just not much of one, but a small bounce. And we're just kind of oversold here. We're ready to, and looking for some sort of a technical correction, a little bit of a bounce, but you're below key support areas when you broke them on Friday, closing below it. Rallies, I think, will be sold as the trend has changed, and the funds will look to liquidate some of their long positions in that market, especially in that July, August contract. Those are the ones that I think have the most vulnerability here going into the late summer, especially that August contract.
All right. It's Brian Hoops, Midwest Market Solutions, and we kind of wrap here with the dollar index.